All right. So, welcome to another installment of the Credit Plug podcast. So, for today's video, we have a very special guest. We have the CEO of Payroll, which is a payroll funding company. Pleasure to have you, Morris. Welcome. Thanks for, just giving us some insight into a little bit about your company, what products and services you have to offer. So, very excited and thanks for taking time out of your busy day. So, I just wanted to jump right into it. What exactly is payroll and how did you come to found payroll? What was sort of the motivation behind the founding of payroll?
Um, Interesting. You want to know how Payroll was founded? It wasn't intention. It was unintentional. Interestingly enough, I didn't know much about payroll besides that I got my paycheck through a payroll company. But I was at a business conference in the Javits Center in New York City, at an accounting and finance conference, where I met the owner of a local payroll company. Now, for the record, many people maybe don't know the difference, but as far as I know, I knew of ADP and Paychecks. I didn't know there were companies beyond that process pay. But I'm talking to this guy, and in conversation, we're talking about loans and other stuff. And he disclosed to me, it was news to me, that he has clients, oftentimes, clients that are his clients for 10 plus years, and he can't afford to disappoint them. And they'll call him up a day before payroll and like, hey, Jack, I got her on payroll tomorrow. I don't have the money in the account. Can you put it through, lay out the money for me? I'm going to pay you back tomorrow or in 2 days. And given the relationship he had with his customers, he couldn't tell them no. He couldn't tell them, I don't trust you. He had to do it. He felt obligated to do it for them, but he wouldn't be able to sleep. Until he got the money back, he just had too much anxiety. That was a struggle he was struggling with, and he didn't know how to go about it. And on a weekly basis, he was laying out a ton of money for his customers, and he wasn't cut out for it. So when I was talking to him and I'm listening to that, I'm like, does anybody take care of that problem? Is anybody maybe lending your customers money just for that? And I, well, I don't know. And that's when I realized, there's a problem. There's a little business challenge that nobody is addressing. And that's where it began.
I know, we've profiled different payroll companies, such as ADP. Gusto is a really popular one with a lot of small businesses. And it's interesting when I came across payroll, I was looking for a similar solution. So a lot of our subscribers who are, small business owners, they essentially were utilizing ADP, for example. And at one point, there was like an integration with Plastique, which
Right.
basically allows you to pay any vendor using a credit card. So they'll basically send your vendor an ACH or a check, and they basically bill your credit card
That's right.
for it. So that solution was working well until it was removed from the ADP marketplace.
Right.
So a lot of small businesses also ran into that issue where maybe there's a shortfall in funding to, pay their employees. That's why I was like, just going through searching for different companies, searching for different solutions that might be able to fill that void. And that's how I came across Payroll several months ago. So I was very intrigued by the fact that your business model seems to cater specifically to funding that payroll gap. So a dedicated credit facility for payroll specifically, which, from my knowledge, there's nothing else comparable to that, at least from my understanding in the marketplace. Can you kind of walk us through in terms of like an ideal customer profile for payroll? What does that customer look like in terms of maybe size, number of employees, revenue, maybe industry? What does that kind of look like?
Yeah, absolutely. And you're right. Plastique is maybe the thing which is probably the closest thing to what we do. But like you said, it's no longer available on ADP's platform. So what we do is we like to position ourselves as a payroll assurance, right? So you have payroll coming up. Your cash flow may be inconsistent. It's going up and down. There are times you get large deposits in the bank, times you get less. And you just need a little bridge from cash flow to cash flow from one point to the next point, usually within a month, sometimes as short as a few days. So the ideal business profile is a business that knows they have those short-term cash flow gaps, perhaps frequently, but it's short-term. So, you have either net 30, net 60, net 90 receivables. Maybe you're in healthcare, you're building insurance, and they have their payment terms. You're in staffing. You must pay your employees when they finish the work. You're only getting paid in 30 days. It could be manufacturing in any industry where you must lay out the money up front. You're only getting paid back later. But it's a short-term issue. It's a short-term cash flow problem. That's a business we can help. If you're looking for money because simply you're not generating enough revenue yet, or you have to purchase a ton of inventory and you only get the money back will take you a few months until you recover the funds, until you can complete the sales, we're not for you. It's any business that knows they have a short-term cash flow gap and they occasionally need that bridge, we will come in and bridge that gap. Typically, a business that in that type of, that would find themselves in those situations and that we fund are doing between $100,000 up to $1 million in revenue a month. We have businesses that do less than $100,000, but once that's getting too small, it's hard to qualify them. And usually once businesses are doing more than $1 million a month or greater, they'll usually have other solutions, perhaps a lot of credit with the bank or other things to back them up. But there's still exception. We actually funded somebody the other week that was doing $3 million in revenue. There are staffing agents running $1 million payroll more than once a month. But we funded them $200,000 at a time just to fill in that little gap they're waiting for. But in terms of industry, let's talk about industry a bit. We cover almost all industry. And that's because cash flow doesn't discriminate.
Right.
It's really there's no specific industry that deals with cash issues more than others. You'll find staffing, perhaps in healthcare, also similar because they have very high, human capital expense, where they'll have a bigger cash flow problem, but it's really across one.
Based off the, I guess, profile in terms of revenue, this would obviously be for more established businesses. But what is sort of the minimum threshold that Payroll sets in terms of, okay, minimum number of employees, minimum monthly revenue?
So the minimum and the lowest begin is you must have a minimum of 5 employees, and each payroll must be a minimum of $5,000, and it must be at least 2 years in business.
To follow up with that in terms of underwriting, right? So you mentioned that typically it's going to be for businesses, let's say you're waiting on, let's say, receivables, whether that's a net 30, 60, or 90. As part of the underwriting process, do you sort of verify, okay, this particular business actually does have some type of receivable that's on the way or it's scheduled, but they just haven't received it yet?
Yeah, well, you see, that's an important point to make. And we need to differentiate between our product and, let's say, other receivable financing products. You have, factoring companies out there, invoice financing, and those companies help businesses in particular when it comes to receivables. You have a huge invoice, it can be $1 million or a few $1 million. If you can get a factoring company that will either purchase the invoice or lend against it, that's invoice factoring, or have a few other terminologies. We don't look at that. We look at cash flow. We analyze 6 months of bank activity, and we want to see that there's consistent revenue coming in. Based off the historical revenue of the past 6 months, we will determine what we expect to continue coming in over the next few months. And then if we identify that cash flow gap, okay, we understand why you need a short-term fund, because there are times you have higher cash flow, times lower cash flow, then we will fund that difference. But we won't fund based on invoices alone. The guy shows his bank statements, there's no activity, or it's too little activity.
Right.
The guy wants a huge loan because he says, I've got all these invoices out there. We're not going to fund based on that. We're not in that business of verifying the invoices and collateralizing against it. That's not what we do.
Absolutely. So it's more so, looking at previous banking history, just to reassure, okay, they actually have been receiving revenue over a certain period of time.
I'll elaborate a bit more.
Okay.
There's 3 key components to look at in the bank activity but underwriting: revenue, cash flow, and daily balance. So we're looking at revenue. We want to see first what your revenue is and how it's trending. If we see a business is trending, revenue is going down every single month, well, it's in trouble, right? So our short-term loan isn't going to help. We're not going to approve them. If we see fluctuating, that justifies a loan from us. If it's sort of steady, that's great too, but it can't be going downwards. And then we must look at daily balances. We're not going to give a loan to somebody that they can't afford to repay, right? So if their balance never exceeds $50,000, they're not going to get a more than $50,000 loan, even if they have who knows how much revenue coming in a month. So daily balance is a key factor that determines how much we can lend them. And then cash flow. We're looking at the cash flow positive or negative. How are they running their business? Are they running negative every single month? Are they really spending more than they're getting in their cash month over month? That means their business is in the wrong place. It means next month will be the same. So if we lend them money this month to cover their shortfall,
Right.
they ain't going to have money next month to repay us. So we're looking at cash flow. We look to see those negative periods, but we also look to see that they recover after a certain period of time. And then we can justify us giving the loan to bridge that gap.
Absolutely. So is there any sort of context put into sort of seasonality, with certain businesses? And then how far back are you looking, and what's enough data in terms of like looking at their previous banking history to determine, okay, this is maybe a short fluctuation or they're trending downwards? Like how far back does it go?
Okay, so we can never just be too close-minded and just look at banks. So there's always a bigger picture. And someone who's familiar enough looks at the bank statements, can we'll figure out what questions to ask and see what's going on. Usually for a steady business that isn't too cyclical, 6 months of bank statements is enough to get a picture. Whoever seasonal businesses, 6 months may not be enough because you just may be in the wrong season, right? So in that case, we'll look at an entire year. We had, for example, the beginning of spring in May, we had a couple of landscapers who were just picking up business, applying for loans, right? So, and this wasn't such a snowy winter, so they didn't have much of the
Right.
snow removal. So of course, the previous months are going to be low. So we asked for an entire year to see what last summer looked like, just to get some sort of, predictability how this summer will look like. We started them off with a lower approval, and as the summer's going along, and we see the revenue increasing month over month, we're able to increase our approval to keep up with our demand. So of course, we're looking at seasonality when it makes sense.
Absolutely. So, can you walk me through just sort of the life cycle from when a business first applies to when they ultimately fund it with payroll? What does that look like? So, someone comes in, they apply, let's say they get approved for a certain amount. What's the next step after that? Like what other documentation would be necessary?
Yeah, well, here's how it works. Again, the life cycle will vary from customer to customer, what their needs are. But as a company, our loan is meant to work as a sort of payroll assurance or an umbrella fund. So a business applies, gets approved for a credit line, which they can use only for payroll whenever they're running payroll. So you apply, it takes 48 hours to get an answer, get an approval, a decision, approval or decline. And once they're approved, they get access to the online portal. And whenever they're running the next payroll, or as soon as they need it, they can log in and submit a funding request. And then in that case, they get funded same day. So 48 hours to get approved, and then same day funding. So you submit your payroll, you check your bank. I don't have enough money in the bank. I'm short $5,000, I'm short $10,000, I'm short $100,000, whatever that number is. Log into Payroll Finance and submit your funding request. We'll wire the funds over soon. But the life cycle can be as short as 3 days in that case. But it depends on the customers. We have customers that apply, get approved, and we won't hear from them for a while. They had an issue one time. They said, okay, let me take care of this. They apply, but their cash issue didn't occur again. But then all of a sudden, 6 weeks or 8 weeks, 10 weeks later, they pipe up and have a one-off issue, and then we're there for them. So you'll have those that come and go and just pop up their heads a few times a year. Then you'll have those that sort of, once a month, every fourth payroll, they're short cash flow. They know already. They know at the end of the month, they're short money or whatever it is. And they're sort of repeat customers coming in and out.
So let's say someone comes in 1 week, they need to utilize payroll, but let's say they don't need to utilize it for another, 2 months. Does that customer have to go under underwriting again? Do you want to look at their recent financials?
To some extent, of course. So there's two parts of underwriting. One is just getting to know your customer, validating the business, the legitimacy of the business and the individuals. That's done once. Right? Once we establish that they are, trustworthy individuals and an established business, we don't have to redo that. But then looking at the financials, of course, that's, it's going to change, right? So we review every 3 months, we review. So any approvals go to 3 months at a time. Comes 3 months, we ask for updated bank statements, and we just do another quick analysis and either maintain the credit line we gave them. Sometimes we can increase it based, on factors, or if we need to make it smaller, we'll.
Now, one of the questions that I just wanted to ask, just because our channel focuses a lot on credit, is there any reporting of to, let's say, major credit reporting agencies in terms of uh, the payroll platform?
So we don't report it anywhere. We do run credit during a soft pull, so it won't affect anybody's credit score, the fact that we're looking at their credit. But an interesting thing I want to note is that we do look at credit, but it's not a hard requirement, meaning we won't decline somebody just because it's not that high. We will look into it deeper. We will look at the bank statements, see how the business is faring and other factors. So we're not so hung up on the actual credit score. We've learned over the years many times that it's just not an accurate prediction. By putting too much weight in the credit score, we're leaving good business behind. And sometimes even the credit score alone doesn't justify the loan.
Yeah, and I talk about this as well because credit scores are backwards looking, whereas cash flow is up to date, current sort of reflection of what's
Exactly. You
going.
can have a great credit score because a person is good at managing their credit. They don't utilize too much. They pay on time, but the business could suck,
Right.
right? And at the same time, there's someone that has a bad credit score. They could have botched up, but the business is doing okay. So in that case, you look at other factors, on the individual. Throughout the years, we do other basic background checks, and the business is doing fine, and they've been in business a couple of years. Then we'll look away at the credit score if it's not that great.
Absolutely, absolutely. I always say that too. In a lot of lending situations, it's a multitude of factors, not just one. What mechanisms are utilized for, let's say, like would a customer have to submit manual bank statements? Are you using any technology to read in that information?
Ideally, we want our customers to connect to their banks via Plaid. So the application is online. They apply online if they're prompted to connect via Plaid. Some people still resist connecting their bank accounts. They feel sort of an invasion,
Right.
right? They're worried about fraud and just worried about giving over that access. It's quite secure. So then we do offer the option to upload bank statements. But of course, the digital connection is much better, much more efficient, and we could respond quicker as well.
Absolutely. And are there any, I guess, banks that may not be compatible? Because, we've reviewed a lot of products in the past which use like Plaid or Finicity. And I know there's like, usually it's sort of the neo banks that might have issues with connections. Have you found that to be any issues?
There are issues, especially with the credit unions. Oftentimes don't connect to Plaid or some other small community banks. Every once in a while, we hear of a bank I've never heard of and get those bank statements. Yeah, it does occur. So we can't afford to limit to only using Plaid. So therefore, we give the option to upload bank statement.
How did your background help you with, currently leading payroll, right? Is there anything, from your past experience that helped prepare you?
It's interesting. A baby's born, and do they have any experience to start life? So a business is born the same way. There's an opportunity that comes up. I didn't step into a business with already, hundreds of employees. It started with just myself. I was really learning on the go. My past experience has been in the lending space, and I've got some been familiar with it, with the industry to some extent, although I've been more in an operational role versus underwriting or sales. But you just get in there. And then I had to hire my first employees and the second and third. And I'll tell you another interesting thing is that when I was underwriting so many businesses back in the day when I was doing all the underwriting, and I've seen so many businesses come through and looking at them, and I realized something interesting. Most businesses in this country or anywhere are not unique. You have a few unicorns, but most people are doing something, someone else is doing the same thing somewhere else. And yet, some are successful, some are not. Look at one guy's bank statements, they're raking it in, it's organized, they're doing great. Another guy is just sinking, and they're not doing great. So what's the difference? It can't be the industry. In every industry, you can be successful and you could not be successful, failure. And what I recently realized is the difference is the individual running it. right? It's not the industry. Those who are successful is because they mastered themselves more than the business. And that's something I can test to myself as well. So I started a company with myself, hired one employee, but then over time, a person, develops themselves into all the roles they need to fit into. Now, when you need to be a leader, you got to become a leader. When you need to be underwriter, I'm an underwriter. I got to be this, I got to be that. So we keep on evolving, learning, and excelling, and improving, and working on oneself to grow the company.
Yeah, and I think at least from what I observe, working with a lot of small businesses, one of the key things I try to focus in on is organization, right? That's why I've been a big advocate of just accounting systems, having a payroll set up, right? Because what I found just in terms of the lending space when it comes to just gaining access is those that are organized better, you're going to have a better understanding of what's actually going on in your business. You're going to have more insight and it's just going to help you operate a little bit more efficiently. So
Yeah, I say organization is key, although not every person is born
right.
with that skill to be organized. And once again, I'm underwriting businesses. Sometimes you see they're organized. Others, they're so, in a way I would say, they need to be, they're so messed up with such a mess, like they got to be really talented to make such a mess. Always, right? And that is key. I find people I'm underwriting, they're 50 or 60 years old. They're running a business and still just catching their tail. And then you have other people that are younger and are running a good business. And if no one takes the time to organize a business earlier on, they'll always be in that stage of just trying to catch their tail and then not be able to grow.
One of the things that I would say, if I knew earlier on was the organizational part, the power of having accounting systems and bookkeeping and being on top of it from, month to month. I try to share with my subscribers just a lot of the basic foundational skill sets and tools that you would need just to even operate efficiently. Because what I found was that there are a lot of business owners that might be really great in what they're doing inside their business, right? So if you're, a chef at a restaurant, maybe you make the best sandwiches, but operating a business is completely different. I wanted to conclude with just asking you a couple of things that you think are really important for business owners to be successful.
Yeah, like I said, had this recent observation, analyzing all the businesses that are applying, because the past 6 months you've had a huge influx in applications. Of course, more applications means much more declines, a smaller percent that are approved. And it got me thinking one day, why are we having so many businesses, repeat industries? Some are worthy of an approval, others are not. What is the key difference? Like I said, the key difference is the people at the helm, not the industry. So, and there's so many areas to excel at running a business. Just being a good leader, being a good delegator, getting organized, excelling at getting to understand your industry and how to market to it. In every aspect of running a business, it's so much to excel at. So which is the key thing? They're all, to me, one of the things I noticed early on after someone mentored me is to get a mentor, to always be learning. You cannot be stuck in your place. Those who are stuck in their place just never grow their business. You have to keep on developing yourself. You must read books. Join clubs of entrepreneurs like yourself. You can trade ideas. Get a mentor, get a coach, get a business consultant. Do something, but you must always be in that mode to grow and excel and learn something else. Today it's mastering the leadership. Another day it's mastering how to delegate. Another day it's mastering your organization. And on all those aspects, as you move on in your business, you need to excel at it again and again and again to keep on growing along with your business.
I think even just the mentorship, and so it reduces the learning curve when, someone is able to kind of lay out a path that they went down, and maybe that's somewhere that you're following. And that's part of what I do here, when I talk about credit, because my earlier journey with credit, I struggled, learn things through trial and error. So then after a certain period of time, I was able to take a lot of that information and share it publicly. So now a lot of my subscribers who are, business owners, they're able to reduce their learning curve and not have to go through some of the different trial and error and pitfalls that I had to go through. So definitely agree on that point. Now, where do you see payroll in the next 5 years?
Next 5 years. Well, we have a lot of we have some ambitious plans. Right? We launched Payroll. Looks like a limited program or limited solution, just offering another type of loan of payroll funding. Really, what we're working towards, and we have some things coming on the pipeline, is an integrated solution in payroll. We're looking to really revolutionize the payroll industry because today, payroll is a cash on demand. You have the cash, you can buy the product. You have cash, you can run payroll. If you don't, you're doomed, right? Unlike any other business service, you can get a hold of it and pay later. We're looking to change that. We're looking to offer businesses the ability to process payroll today and pay for it later, through our loan product, but primarily through integrations with the payroll softwares. We have some serious conversations right now. Too early to talk about them with many larger payroll companies to integrate our solution to make it seamless with processing payroll. So business will have the ability to submit the payroll on the payroll portal and then immediately choose to fund it from their own bank account or tap into their line of credit with us to fund their payroll. So that would really change the whole way payroll is processed. It would eliminate entire stress many bookkeeping offices or CFOs are busy with when it comes to payroll. Do I have the cash to make? Do I not have it? Running after money to get and moving money from personal accounts, running after customers to pay just so you can get the funds in time for payroll. We're going to change. And we have some partnerships really coming down the pipeline.
I'll add to that because what I actually found to be a game changer, and maybe it drew in way too much demand, which is why, as we stated earlier, Plastique ADP integration, there was overwhelming demand for that. So that just goes to show that there's definitely a gap in the market for an integrated solution where you can do everything through the payroll portal. I guess the way it's set up now, and it's kind of it's not integrated. So you'd send the money to the bank account or to the business's bank account, then they'll use that to actually pay their payroll. But something where it's fully integrated and seamless is definitely a game changer. So
it's just like it took off in the consumer world. Many companies offer buy now pay later concepts from other companies. That's exactly what we're looking to accomplish. Business comes to payroll. The payroll can be processed today, pay for it later.
definitely excited, for some of the latest developments. If anyone is interested in applying for payroll funding through Payroll, I've dropped a link in the description of the video. Morris, it's been a pleasure having you. I definitely appreciate you coming on and sharing some information and wisdom with our subscribers.
Thank you. Likewise. Pleasure to be.